FMOCstrategy.com.
Hello again, it's Chris looking at the upcoming Wednesday, September 17th trading session. I have the economic calendar in front of you. As you can see, quite a few numbers coming out of Great Britain, but this is going to be a little bit different in the sense that we are still waiting on that Scottish vote. So although you will have the MPC votes, high exchange, etc., unchanged. The only number we really can pay attention to at this point in time is going to be unemployment. However, it's probably going to have somewhat of a muted effect on the marketplace just simply because of the Scottish votes. So really not looking for a whole lot out of that. CPI year over year could move the euro and the DAX if it's a little better than anticipated. Quite frankly, though, do not look at that as a major market-moving event. Really, the market-moving events are probably going to be found in the United States just because it's going to be more of a normal, clean play of the core CPI month over month, anticipated to come out at 0.2%. The 0.2% reading, if it does in fact end up being true, we feel that this market will ultimately stabilize. The S&P 500 looked pretty good during the session on Tuesday, but if we break out to the upside based upon this number, we would be very, very bullish of the S&P 500 above 2010, and we think this could be one of those things that pushes it in that direction. So we'll have to see. Could add some strength to that uptrend, though. And with that, let's take a look at a few charts. Okay, looking at probably what is going to be the most active, or at least the most important chart that we see during the session for today is going to be the S&P 500. You can see that the candle for the Tuesday session is fairly strong. It's breaking the top of a hammer, and as a result, looks like we're going to make a move towards 2010. We don't see any reason why that won't happen, so quite frankly, we are buyers, but the CPI number could be effective as far as what happens next. We believe that a break above 2010 is a very bullish sign, but probably won't get it during the session today. Probably just a continuation of the consolidation that we've seen for some time. Looking at the euro dollar, you can see we've made a serious move towards the 130 level during the session on Tuesday, have not broken out above it. If we do, and it does look increasingly likely, 132.5 will be targeted. We think a short-term buying opportunity of calls could be in play there. Longer term, though, we're still pretty bearish on the euro. We think it needs to go even lower, probably down to about 128 or so. But at this point in time, it looks like we could break out. So above 130, we would be bullish, in other words, buying calls. If we did break down back below 129, we would more than likely go down to 128. At that point in time, you could buy puts. Oil markets, as you can see, have had a fairly strong day during the day here on Tuesday. We think that there's a bit of a ceiling up here at about 96, though. So really, we're looking for the market to come a little closer to here, show signs of resistance. And at that point in time, we would not hesitate to buy puts, as we think we will continue to meander between 96 and 92 going forward. You can see that the British pound is picking up a little bit of strength during this session. On Tuesday, if we can get above this gap here, which is basically 163-ish or so on a daily close, this market could go to 166. We are paying attention to the Scottish vote, of course, and it's starting to look more and more like the quote-unquote smart money starting to step out ahead of that vote. There's a lot of concern out there, but quite frankly, there's probably more risk to the upside than the downside at this moment. So therefore, above 1.63, we are interested in buying calls. And with that, I've taken a look at the Wednesday, September 17th session.